So with that, I'm going to bring our second speaker, Greg Manger from Franklin Equity Group. Greg is a senior client portfolio manager with Franklin Equity Group. Greg is primarily responsible for representing Franklin Equity Group's investment strategies to domestic and international clients specializing in small, mid-cap, biotechnology, and technology strategies. He will discuss advancements in artificial intelligence, known as AI, and explores potential impact across industries, including technology, healthcare, utilities, manufacturing, and financial services. Greg brings more than 20 years of investment experience, including 9 years at T. Rowe Price and several years in sales and account management at Legg Mason. He holds a BS in marketing from University of Maryland at College Park and an MBA from Loyola University of Maryland, and is a certified investment management analyst designation from the Investment and Wealth Institute. Please welcome me and join Greg so much. There you go. I don't know how you want to do that.
You know what, I'm going to practice my mic technique. I was going to use the motivational speaker microphone, but today I'm going to try this out. So if I start to do this, just give me a funny look. I'm going to rely on everybody in this room to help me out. Takes a team. Appreciate the introduction. Thank you so much for having me out. I appreciate that. So just a little bit about me, what I do in my group in particular, and why I'm here before you to talk about artificial intelligence. As it was mentioned, I'm a client portfolio manager with my division. I'm part of our technology sector team. So I spend a lot of time going out on the road, presenting various presentations, whether we're talking about the technology sector in general, artificial intelligence, or specifically our funds, and providing updates to investors. But I think what makes Franklin, particularly Franklin Equity Group, uniquely qualified for this is that our home office is in San Mateo, California. For those that might not be familiar, San Mateo is in the heart of Silicon Valley. And we obviously sit in such a hotbed of innovation, particularly on the artificial intelligence front. And we have, through our venture capital division and through our different mutual funds and portfolios, we invest across the private and the public spectrum and have a ringside seat to really see exactly how these different technologists, engineers, and financiers within the world of tech and AI, what they're saying and what they're thinking. And so the purpose of this presentation is really just to share some inside baseball and some insights into what these folks are thinking about, what's on their roadmap for success, what we think might happen with AI and why it matters, why you should be paying attention and hopefully interacting with this. And then maybe towards the end, for those of you that haven't really interacted much with AI, I can give you a couple of different tips and hacks, for a starting point that I think is really useful to get to know. And so these are things that I tell my family members about, and I think is something that should be really useful to everybody in this room for a variety of different tasks. So without that, what I'd say here is this is certainly going to be the biggest technology shift that we're ever going to witness in our lifetimes. I'm very confident of that. And I think that a lot of the engineers that are at the forefront of pioneering this technology see something very profound on the horizon, as do we. And we think that in the fullness of time, when we look back on this is going to be on a scale much larger than the way that the internet changed our daily lives. And I think part of what makes this so profound is throughout human history, when we had different technological advances that came along, we've never seen a technology that has essentially taken this concept of innovation being really coming from people that have ideas. That's a finite supply. But AI is essentially divining intelligence, more or less, out of thin air. And we see an increase in the supply of innovation coming. And so rather, we're going from a world of relative scarcity in terms of novel idea generation and new technologies that come from a limited number of people and a limited number of ideas, to innovation coming from a relative limitless set. And what that's going to bring is a lot of disruption. It's going to bring a lot of change. There's going to be a lot of creative destruction that happens in this process. But there's also going to be an incredible amount of growth and wealth creation that also occurs. And so the whole purpose of this presentation is to really get you in the mindset of thinking how these different technologists are thinking about it and how we're kind of approaching this new technology base that's forming right before our eyes. So to really get you in the proper mindset, I think it's important just to touch on some of the big technologies that have come about in the last several decades that I think everybody in this room, to one degree or another, is pretty familiar with. And really what happened here is all these different technology bases, whether we're talking about the internet, mobile computing, so smartphones, the cloud, all of these things basically changed the way that we interact with computers. Internet, of course, created and facilitated frictionless exchange of information between people. Mobile essentially allowed us to take that from the desktop and put it into our pockets. And essentially we have smartphones today that are 10 times more powerful than the supercomputers of the 1990s. Cloud, what that essentially did was it achieved like a level of efficiency and scale in terms of how all this computational crunching is done. And it allowed companies to essentially outsource their IT departments to different cloud providers. And then AI essentially, apart from the creation of all this innovation that comes from boundless new ideas, it's actually going to reinvigorate these different technologies. It's going to not only just extend the life of cloud, of mobile, and of internet, but it's going to create entirely new market opportunities within each of those. So we haven't really seen a technology that has a positive feedback loop to this degree with the technology bases that came before us. This is a really big deal, we think. And what I would point to you here is the value of any of these technologies isn't really found in the actual technology itself. The value of these technologies comes from the ecosystems that these different technologies create. I'm going to share with you, so I am going to go here, but I'm going to share with you a painful story about the cruelty of a father. And when I was younger, I lobbied my parents really hard for several years to send me to space camp down in Alabama. That was my dream. I wanted to go to space camp. Send me there, send me there, send me there. So my dad one day, he says, "Hey son, got great news for you. You're going to space camp. You're gonna hang out with astronauts." I'm like, "Oh man, it's finally happening." Yes, I'm 9 years old. So this is like 1990. I'm like, "Oh, going to space camp down in Alabama, pack the bags, hold my mail." Well, he then elaborated, "Oh, I'm sending you to computer space camp in Beltsville, Maryland, at the National Cryptographic Institute." I'm like, what the hell is that? Right? Cruel. So I'm there, it's 1990, and this is pre-internet browser, right? And I think we take the pre-internet browser era for granted. I was fortunate enough, my dad was really into computing, so ever since really the age of 5 or 6, I was on the computer dialing up direct bulletin board services. So this is like pre-Prodigy Online, pre-America Online. You basically got a printout of all these direct posted bulletin boards, which was rudimentary websites that you called into directly using your, at that time, a 600 baud modem. And I was pretty familiar with like this idea of a public internet of sorts. But I'm there, I'm sitting, I'm learning, and I'm talking to the instructor, and I'm like, I know what's up to a degree, but I'm like, okay, well, what do you think about this internet thing? And he's like, well, you can send emails anywhere around the world, and you can exchange information, just like that. I'm like, that's cool. What else can it do? I don't know. but it's going to change our lives. And there was wisdom in that because A, he had enough humility to admit that he wasn't really sure exactly where this was going to lead, right? But he knew it was going to be big. You just feel it in your bones. And I think when you're a technologist and you're looking at some of this stuff, you know it. You can't articulate it yet, but you know it. You know it when you see it. And so I think this is the mindset that I approach when I talk about AI, because we have some low-hanging fruit ideas of where we think this is all going to go, how this is likely to develop. But the truth is, just like I was 9 years old back in 1990, kind of going, okay, well, here we are pre-internet browser. Can I imagine the internet yielding the rise of social media empires down the road, or the rise of e-commerce and digital sales and media advertising, or the birth of streaming that changes the traditional over-the-air TV and cable landscape? It was impossible to foresee those things that early. But we knew it was going to be big. And I'm here to tell you that with AI, we have some ideas that I'll go into about where the next step is and where the next step beyond that likely is. But I'm also here to tell you that I have no idea about some of the different innovations that are coming down the pike. And so it's just something that we're all going into, feeling our way through the fog at the same time, but keeping an open mind that this can take a number of different directions. What's really significant, though, about this new technology base is that it's being adopted so quickly. In Silicon Valley, you hear a lot thrown around in terms of daily active users, weekly or monthly active users. Any of you seen the show Silicon Valley? A lot of that is true. That's how a lot of folks talk. But the reality is that it took 5 weeks for ChatGPT to amass 100 million users, active users. It took Uber 70 months. I think Uber's pretty important, but it took a long time for it to gain critical mass and escape velocity. TikTok, love it or hate it, mostly hate it, but the reality is it's a complete phenom. It took 9 months to get to the same watermark. But the interesting story to me is not how fast it got to 100 million users. It's what happened after that. How it scaled and grew exponentially after that to get to a point now where we're looking at roughly anywhere between 700 to 800 million weekly active users. It's astounding. And when we talk a lot about these different technologies when they develop, humans just have a really, really difficult time understanding exponential growth. We have a really difficult time understanding really large numbers. And when we look at how this is growing and advancing, it is taking on an exponential growth curve. This is just kind of showing one such way of looking at the growth. And I don't think I can say specifically which company this is, but it wouldn't take that part of the guess to figure out that it rhymes with Schmishmidia. And the idea being that an AI server is insanely more expensive to run and operate than a traditional data center CPU-led server. 27x more expensive. And what's really interesting about this to me, though, is that when you're talking about doing AI model training and operation at scale, every bit matters in terms of efficiency. To do these things at such extraordinary scale, the efficiency matters greatly. It's not a matter of buying a bunch of cheaper chips that are less performant or have less horsepower under the hood and just buying more of them and daisy chaining them together. It's about building system efficiency to maximize your output. And for reasons I'm always happy to go into, NVIDIA still remains king of the hill in that regard, because what they've done that I think people are kind of aware of now, but they're still trying to understand, is that it's not just about having a super powerful chip. It's one part of the stool, of the three-legged stool, right? They designed a chip, the hardware, that was married and blended seamlessly with their own software, that is then married and blended seamlessly with their own networking connectivity. And that is why they still remain today, I would argue, both misunderstood. People misunderstand that synergy between those two things and why it's so, so important. It is a secret to their sauce. But also remains why they are so dominant, because they have the most complete technology stack for what is a very heavy lift, and that is model training at scale. Very, very, very compute intensive. And every little bit matters. So why are these companies spending all this money on building infrastructure? What do they see that would prompt them to write some of the astronomical checks that we've already seen get floated around the news headlines? Well, some of that answer lies in these charts. It's a little bit of an eye chart, so I'll just explain what's kind of going on here. But these models are essentially ranked in terms of human equivalency standards. So the 0 line represents average human equivalency, and these different multicolored lines represent how quickly these models have achieved human-like equivalency across key areas like image recognition, speech recognition, predictive reasoning, handwriting, language understanding, so on and so forth. And really what you're seeing as you move further to the right is that these models are evolving faster than Moore's Law. It's really what it comes down to. So for those that are familiar, one of the most famous scaling laws that computer nerds love to talk a lot about is they talk about Moore's Law, which basically says every 18 to 24 months, computer chips get twice as performant at half the cost. And that represents in total sum a 4x lift every 18 to 24 months. Half the cost, twice as powerful. These are scaling at a rate that is approximately, depending on how you measure, 4 times to 8 times faster than Moore's Law. So as a technologist, we haven't seen this kind of rate of advancement. And the reason why these attributes started to scale much more quickly to that 0 line of human level equivalency was because in 2017, you had essentially the big breakthrough in AI, which was the transformer model was developed. It was developed by different Google researchers along with some academics at the University of Toronto, but it was the transformer model, it's the T in GPT, generative pre-trained transformer. It's the T that allows these models essentially to self-train, self-learn, to infer meaning in context, and predict the next most logical character that comes in the sequence. This is the essence of what makes generative AI generative. And it's scaling fast. So where does that leave us in terms of where we are with this story of building the bedrock, building the foundation of the infrastructure, and where it's going next? And what I tell a lot of investors is that while we're very keen to maybe look a little bit further out on the horizon and see where this is all going and try to anticipate the next turn in the curve, what gets overlooked is that the infrastructure building phase of any technology is measured in years. It's not measured in quarters, months, or weeks. It takes a long time. And for as long as in the tooth that all this AI fervor and related spending may seem, I am here to tell you we are not out of the first inning yet. To go where these AI engineers are talking about going, conservatively speaking, we probably need 100x of the amount of money and infrastructure that's already been committed. And when you talk to some of these people, I've seen this movie before, and that is a lot of folks tend to discount some of these technologists. They go, here goes those Silicon Valley people again with their big ideas and computers. A data center the size of Manhattan? Never happened. Whether it happens or not, I can tell you that they are dead serious. Just listen to the likes of the Sam Altman from OpenAI or Dario Amodei from Anthropic. And what they're saying to you is that this is not about developing hyper-efficient large language models. This is about going to the promised land of physical AI, where essentially AI will serve as the central brains for humanoid robotics, advanced robotics across all sorts of settings, medical and factory floor, real-world physical interaction, and real-time processing. And to get there, you need an incredible amount of infrastructure. You also need continued improvement, like we've seen from these scaling laws. And right now, the infrastructure story, which feels long in the tooth, but is still so young, is most represented in the technology sector, as you'd imagine. So across the chip makers and the different companies that feed into that. It's also with the certain software companies, but really also with the cloud computing types of names. Going back to my original comment about how AI is likely to breathe new life into some of these pre-existing technologies, the reality is that because it's so cost intensive, if you're a company, to do your own model training and development at scale, roughly 60, maybe 70% of Fortune 500 companies lack the sufficient technology infrastructure to be able to do it. So they're left with a choice of you either invest really heavily in your own data center and technology footprint, or you outsource it, save 40 cents on the dollar essentially, and probably achieve more efficiencies. So this is about as big of an opportunity as they come in that regard. But where it starts in technology, it diffuses and it starts to spread to other areas. And whether you're talking about healthcare, industrials, any parts of the consumer and the utility stack, the real companies that I think benefit the most and ultimately will benefit the most from this is any company that has a really large, unique, proprietary data that has the resources to be able to invest in the technology, to wrangle the most out of it, and has a leadership that understands the value of the technology. These are the companies that ultimately emerge as the big winners. And the ones that really don't embrace it, I don't think they will be looked on too kindly by the market in the fullness of time. Going back to my comment about how humans just have a really difficult time with wrapping our minds around really big numbers, this table basically shows you the habitual underestimation that analysts have made in terms of really big milestones for these different technologies. So whether you're talking about, for computers, the number of PC users, or the internet in terms of the number of users, smartphone shipments, so on and so forth, you basically see a pattern, which is they underestimate. They always take the under when it comes to how these technologies ultimately grow. An average rate of underestimation is in the high 30s across any dimension that you want to pick. So when we talk about some of the big numbers around AI and what that might represent, history says that we're probably underestimating it, and significantly so. So this is some of the basic back-of-the-envelope math that I think some of the biggest spenders on AI are really thinking about, and there's some important implications to all this. But basically, what is the AI productivity promise? What does that translate to in terms of value creation and all that? Well, they're really going after the knowledge worker economy. There's 1 billion knowledge workers, roughly, give or take, around the world that make on average $50,000 a year, in US dollar terms. That's a $50 trillion total addressable market. US GDP in total was roughly, at last measure, around 29-30, something like that. So it's more than a US economy being added that didn't exist before. And whether you're looking at a 1% productivity gain, 5%, 10%, you see pretty quickly that these are really big numbers. And early indications for AI productivity that are kind of feeding into these forecaster models, we're already seeing well into the double digits of potential productivity enhancement across key functions. Certainly software development is a clear and present example of where we've seen this. I would suggest that if you're interested, check out some of the latest updates from Wired. And they talk a lot about where they've seen kind of these efficiencies come through in terms of code writing, developer operations. And it's pretty impactful. So again, if we're just taking a really low estimate, 1%, 5%, 10%, we're talking about really, really big numbers here. And so going back to my comment about where this is all going, it's not about having highly performant, efficient, large language models, which basically serve as enhanced search bots, but it's really about the movement around agentic AI, which basically means these models will have the ability to execute tasks and perform functions a lot like a human does. And they'll be working alongside human workers in order to help perform some of these different functions and tasks. But the real goal that every single AI researcher we talk to has is all about this notion of physical AI. Robotics, and you see autonomous driving as an accessible example, but really it's all about enhanced robotics. There will be some downsides, and I think no one really has a good estimate on what the total impact is likely to be. Some estimates I've heard is that 8 to 9% of the workforce would be essentially totally taken out, job function-wise, by AI. And then other job categories would be different shades of that. This one, which was a research report done by McKinsey, estimates that you could have 92 million jobs displaced by 2030. But they also think that you probably see around 170 million new jobs that ultimately be created. Part of what drives that analysis, just to give you the scoop there, is usually when you have like a goods producing job, it usually takes around 5 to 6 other jobs that all support that. So there's a little bit of a job multiplier that they're kind of playing around with. But the point is that this will have an impact. And I think ultimately, one of the challenges, there's many. I think a lot of them they're able to be overcome. These aren't deal breakers, with the exception maybe of energy intensity. I don't need to tell you guys the state of our infrastructure for the grid across most parts of the country, but it's in dire need of a makeover and a facelift. I mean, it's bad. This will obviously apply a lot of pressure to an already struggling grid system. Then you also have the equation of like, well, how do you generate all the electricity that's going to be required? You have around, loose math, 5 to 6 years worth of excess electrical generation capacity in the United States. And that number is about 38 gigawatts. These AI data centers are consuming roughly 6 to 7 of that each year, based on their current trajectory. So you can kind of see that, all right, well, 5 to 6 years, you roughly get to the point where all that excess capacity has been wrung out. Then what do you do? That's going to apply a lot of pressure to consumers and individual ratepayers. And there's no easy solution for it in the near term. There just isn't. It takes a long time to bring new nuclear projects back and get them online. This is a 10 to 15 year story, and 10 years is probably generous. Lastly, what I would say though is, if you guys haven't really interacted with any of these models as much, I tell my family members, I think going to something like Perplexity is an interesting first step. The reason why Perplexity is interesting is because it's sort of like a springboard to all these different types of models. So you can experiment with ChatGPT, Gemini, Claude. These are all, Grok. These are all just different names for these different models. But the reason why it's interesting is because some models are really good at visual data, like looking at charts and graphs. Other models are really good at written word. Other models are really good at equations and formulas. And what you can do is, when you go and you use something like a Perplexity, you can start with a ChatGPT, start interrogating, upload data, do whatever you'd like to do, and then you can switch to a different model in your same session. So what I do is I have to crunch a bunch of different sell-side reports, economist reports, and things like that in short order. So I feed them all in, and I start with ChatGPT, because ChatGPT is really good at looking at visual data first, pie graphs, bar charts. And then once I start to interrogate it, ask about, what is this about? What is this telling me? And start to go multiple levels deep. I then switch over to something like Grok, where then I'm actually now asking in a dialogue sense for more specificity and to provide me with output in terms of how to write a research note that I can communicate to my colleagues. And then I usually finish with a third model that understands my prose and my style and manner of speaking, and then it puts together a final email template that I can look at and proofread, take out what I don't like, wordsmith something else, but pretty much good to go. So I would start there, and then if you're curious about it and you get a little bit further, well, there's almost limitless ways you can take this, but I can give you additional websites where you could actually download models, not from these big players like an OpenAI or Perplexity or Anthropic, but models that are developed by teenagers in their bedrooms, which is usually where the best stuff is. I'm not even kidding, there's over 4,000 OpenAIs out there, if you want to think of it like that. There's over 4,000 large language models. The vast majority of them are crowdsourced. They're made by enthusiasts. Some professionals, but a lot of people that are just experimenting on their own. And they're like Lego pieces. You can stack them. So you can stack and combine different models together that have different strengths. It's wild stuff. And we're just scratching the surface. So I'll stop there, see if you have any questions. But I would say that this is a pretty big opportunity. And I take a more constructive view that I think it's going to be less like a James Cameron dystopia, like Terminator. But that doesn't mean that's not without its risks. It needs to be approached with humility and understanding that it's going to be a brave new world. So is there any questions that anybody's got?
Bring the mic over to you. Unless you want to yell.
Yeah, thanks. You touched on it briefly, but the power, I've been to a couple of these data center conferences. We're in the construction industry. We're doing some of the site work for it, and huge concern. You just mentioned about the 5 to 6 years. I don't want to see where they're going to get the power. There's not enough power in the next few years to do this. So what are, on your perspective, where is that going to come from?
Mostly nat gas. So the thing about the reason why the term baseload power comes up a lot when you talk about data center needs is they need a constant steady state flow of uninterrupted energy, of which of the nuclear variety provides the best. It's always on, it's always steady. And the reason why steady matters is because if you're to modulate where there's a lot of fluctuation in the amount of electricity that's going through the grid, it wears out and stresses out the grid. So you need steady state, always on, very calm, cool, and collected baseload power. Nuclear's the best for that, but we haven't built a new plant in this country in decades, and we lost a lot of institutional know-how on how to do it. So that's like a 15-year story. So what do you do between now and then? The way the tech guys are talking about it is you go to the lesser of evils in that sense. They've all signed these commitments to, be like net carbon neutral. They want to reduce their sourcing of energy from dirtier sources like traditional oil and coal-fired plants. But they've given a pass to nat gas. And so you can get a nat gas combined cycle electrical plant probably up and running in 2 to 3 years. So that's probably going to be the absolute bridge fuel. And that's why you've seen, I think, a lot of the independent power producers, but also like the companies like a GE Vernova that make the gas turbines to convert the gas into electricity. They have been absolutely on a tear because they are booked out. Their orders are entirely booked out until about 2029. Never seen that before. And the demand there is real. So it's going to be gas because I don't see any other real alternative for that baseload power. But it's going to be, you're going to need every contribution you can get. Renewables and intermittent sources will play a role on different parts of the grid and should play a role, quite frankly. But also you need that reliable, steady power.
Thanks.
Thank you for that. I'll go to you next.
Thank you. You talked about the investment that it's going to take in infrastructure and moving forward. And some of these companies I know are investing huge amounts already, like Meta is and companies like that. Which are the companies that, if you were looking 5 years from now, are going to be the ones that strike it big, are the ones that we should invest in?
Crystal ball time.
It's funny because my compliance group would have a field day if I start going deep into specific stock picks. But I'll do my best to give you some information without ticking off the people that can make my life a nightmare.
We won't tell.
So there is a reason why these mega cap companies are so dominant. And again, it kind of feels like, well, we've heard this story now for the last couple of years, right? Like how much information alpha can really be left in this? And I still think, again, if you believe like we do, that we are still really early stage in this infrastructure building story, and I'm convinced that we are, from an industry perspective, the industries that you see on this slide are the low-hanging fruit, closest to the pin areas that most represent the infrastructure plays. The chip companies, in particular the dominant ones like the one that I talked about, are still king of the hill in that sense, and likely to be for the foreseeable future. But it also comes down to the cottage industry of some of these different companies that play a role. Cybersecurity, I don't think gets talked about enough as being a prime beneficiary. Just one tick off of the infrastructure level. Because clearly what we are seeing right now is that with AI, it's not just the good actors that are using it, it's the bad actors too. And the surface area for these different risks to seep in increases with AI. So you need more sophisticated tools and resources to be able to identify these malicious threats and these bad actors and be able to respond more quickly, because these models are canvassing for weaknesses almost instantaneously and then acting on those things. Whereas a hacker group, it might take time to plan, coordinate, infiltrate, embed, extract. So you need better tools to be on the front foot proactively with this. And I would say these areas are still going to be, I think, leaders in a multi-year type of view when we think about still being so early stage in this infrastructure build. I think you had a question.
What about China?
What about China?
Who's going to rule it, us or them?
AI?
Yep.
They're going to have their own brand, and we're going to have our own brand. The most likely scenario in all this is that you have a multipolar world of these different dominant AIs. Like, for example, if you were to access the DeepSeek models, which were developed, by a Chinese lab, great models, but it's trained on a different data set. It won't answer questions about Tiananmen Square, as an example, among other things. That's also one of the risks of AI in a sense, is because they are subject to different biases based on the method and manner in which they were trained and on the data that was selected for their training. Some models are much more democratized and open source. Others, they're a little bit more trained on specific pools of information. So you have to be aware of that, but then also in terms of China, they're going their own way with this, just like we're going to go our own way. This is analogous to the space race. It really is. And I think that kind of competition really brings out the competitive spirits, both here and in China, in terms of trying to get to what they view as owning AI, or we would view as owning AI, but the reality is you're going to have multiple spheres around the world.
Well, it sounds like electrical is the big turning point. And I think they can probably produce a lot more power than we can quicker, because they don't have the regulatory agencies like our government does. And that's what's holding it back in the future, like you were saying.
Yeah.
That infrastructure.
So what he was saying is that China doesn't have some of the same bottlenecks that we have in terms of electrical generation. They have the largest nuclear fleet in the world. Now, the biggest bottleneck isn't, everyone talked about like the scarcity of chips, right? Not getting enough of these NVIDIA GPUs and things like that for model training. That's true. The chips are still in very short supply. That hasn't changed. But eventually you're going to have a supply of chips come online, and we don't think we're anywhere close to that date yet, but there will be a time where the chip market is oversupplied. It's a tale as old as time in this space. But electrical is the biggest bottleneck because, as we talked about, it's really hard to bring these new projects online quickly. It takes many years. And while the US has 6,000 data centers roughly today, it's like 5,800 some odd number. China has the second most at about 800 data centers. They're not as limited and constrained on the electrical component. So they can build more data centers, and they will. And they have the electrical means to provide the support to do it.
Where do you see the biggest risk? As you kind of invest as an investor, where do you see, the risk of in AI?
So the question is around like where's the biggest risks that we see as an investor within AI, and we're still really early in this, but we talk about it a lot on our technology team, but there has been some concerns from the market, right, about, well, if AI can write software code, what does that mean for the software companies that have been the darling of the global markets, for the last 15 years. What does that do to the value creation that came from the likes of a Microsoft or a ServiceNow or a Salesforce, on and on and on and on? And there is a risk that AI poses a threat to that moat that these software companies have enjoyed. But we do think that it's likely to be a little overblown at this point, primarily because what we find is that most businesses, and we're talking like your large scale businesses, their software vendors that they have relationships with, the more areas of their business that software is inserted into, the stickier that is, but also the riskier it is to change it. And there is not a lot of eagerness for these companies to take a flyer. Like if you're JP Morgan, you're not going to take a big risk on having your in-house AI write your payment disbursements code for you. Because if you mess that up, you're not only going to run afoul of the regulators, but you'll be awash in legal troubles too. The risks are too great. So some of these software companies that are really inserted across multiple touch points in a company, I think in time are actually going to be okay. They're going to be right at the forefront with developing some of these in-house tools that the companies will perceive as a lot less risky than doing it on their own on an unproven AI. Lower value stuff, that's where that's at risk. You have companies that aren't touching as many pillars of a company. They're a little bit more specific and niche in a given area. They could be a little bit more ripe for disruption, but I think one of the bigger risks there, investor-wise, could be coming from what they call horizontal software companies versus vertical software companies. That are probably gonna be okay. Socially, it's gonna be around the transition, quite honestly. When automated farm equipment came around, there was an adjustment period that human labor went through, but ultimately they made the transition because it was a transition that happened in over decades. This is a transition that is going to happen over years. And so how do you retrain elements of the workforce to go into hard trades? HVAC, plumbing, electrical. That takes time to retrain and repurpose. And this transition is going to happen faster than any technology base has done before. So when I tell my 16-year-old and 12-year-old daughters, what does that mean for you as you kind of think about what you want to major in school and what you might want to do? I don't know, honestly. But what I do know is if you don't start, and I'm talking about my daughters, it's like if you don't start early and often trying to understand how to use this to your advantage, you will be left behind. That I know. But if you want to have a puncher's chance, you have to be fluent in how you interact with these things and how you can use them to do the things that only humans can really do. Relationship businesses, that's still a bedrock thing where at the end of the day, as much as I am a tech-savvy person and a tech evangelist of sorts, I want to work with a human in matters of my money, health, well-being of my family members. I like to use AI to augment and make better my tools that I have exposure to, but I'm not going to go to a AI model and say, here's my life savings, allocate it as you see fit. Or I'm still going to want to talk to my doctor. I want my doctor to use AI, help out with the diagnoses, the accuracy of those diagnoses. But I don't want to talk to a smiley face on an iPad. How are you feeling today? Bad. So those are the risks, as I see it. But I'm sure there's others I'm not doing justice. Any other questions? We got one in the back.
I know you touched on the demand for the energy side of it. How about for the electrical grid? Because I know that the lifetime of a lot of our grids are past their life expectancy by 10 or 15 years, which complicates the whole issue as far as supplying energy.
Yeah. I can't remember when it was that it popped up into my consciousness, but it was at least 15 years ago. Yeah, it was about 15 years ago. I was reviewing the infrastructure grades that different watchdog agencies will put together to kind of assess on an A through D scale where our infrastructure ranks. And we were like a D and a C at best in most critical areas of infrastructure. Tunnels, waterways, roads, bridges, grid. Grid was on average. Some jurisdictions are better, others not so much. And what this additional demand for electricity is going to do, it's going to expose the most vulnerable parts of the grid. The jurisdictions that have neglected it the most. And it will become very evident very quickly which ones cannot handle the additional base load that's coming through. Where it's happening now, though, it's mostly in the Sun Belt states where they're coming from a lower base, so the economic impact is a little bit more muted for now. And you have certain jurisdictions that have made better attempts at modernizing parts of their grid than others, and not to name names, but it's like the Northeast is just terrible in terms of transmission and grid. California, Pac West, also pretty bad. So it's going to expose those weaknesses pretty quick. But from a utilities investor perspective, what it's doing though is it's firming the amount of money that needs to be spent in order to make the grid up to snuff and also build upon it and expand it. So transmission and distribution, that's the grid, and then electricity generation, those are the power plants. And the way that a utility company makes money is it's all about the amount of money that they spend. They are allowed to recoup a percentage of that every so often, but the base formula is you have to spend the money to first recoup some money. And so what this has done is it really has more or less underpinned the spending trends within the utility space. So it's net positive is what I'm saying for utilities, but it'll get to a point where they can't pass prices on anymore at some point.
Of course they can.
They're going to have it's going to be a reckoning. That's why certain states, you can't do that in New England. Impossible. That's why they're going to Texas. They're going to unregulated markets.
You got to figure out something. You won't be competitive.
Necessity is the mother of invention, right? It's gonna force some change, one way or another.
Yeah,
Hey, I thought I was bullish on AI. Yeah. Any other questions or concerns?
I'll probably be one of those people that gets left behind in AI, but from my understanding, if it's accessing all these databases of information, and you have different countries with their different models, sort of modeling their database to fit their ideology or whatever, like you said before, how do we trust what we're getting back from AI? And who's regulating that?
Short answer is that there's no one really regulating it yet. The Europeans are trying, but try as they might, they're doomed to fail. And the reason why is because this technology is advancing so rapidly, slow, clunky, clumsy governments and their regulatory frameworks are not going to be fast enough to react to each evolutionary turn that AI takes. It just won't. The writing's on the wall. That being said, We are still very much in a trust but verify type of approach. These models are far from perfect. The message I was trying to give to you is that it's not about where we are point in time today, it's about the rate of advancement that has occurred over the last several years. So it doesn't take a lot of work to really kind of figure out. If you take that rate of advancement and you say, okay, well, if we know that it started out as a 1 3 years ago, and then a year after that, it was at 8. A year after that, it's at 56. You can kind of look out a little bit into the future and say, that's pretty soon these models are going to be really good. But we're still in the trust but verify. And I even think when they are really, really good, you still have to check its work, because I will see times where the model hallucinates, meaning it made up a number. And there's some like trickery that's happening that no one's talking about either. Like, some of these model providers, I have it on excellent authority. Take that for what you mean, for what that means. But I have it on very good authority that their models are sometimes creating data sources called synthetic data and using that as a primary data source that their response cites, making up articles that didn't exist. Going to articles that are behind a paywall, reading an abstract about it, and then using that as a cited source for its output. This is happening right now. So you have to trust but verify, and you really have to verify. I didn't mean to scare you, but I don't want to just blow smoke at you either. It'll take some work, but we adapt, we get used to it, we figure out where the blind spots are, and eyes wide open. Well, thank you so much. I'll be around, so just feel free to let me know questions.